In today's episode, we are looking at my Robinhood account today. We're going to do something a little different and compare my Robinhood account versus my M1 account. First, we'll look at the stocks in my Robinhood portfolio. Secondly, we'll look at strategy for my Robinhood account versus my M1 account. What are the differences and why I choose to do what I do in each account. And then lastly, we'll take a quick look at my M1 portfolio for the week and see how it performed. So, first, if you want a channel that's going to help you speed up your journey to financial freedom through dividend growth investing, Stately Investing is the place for you. So, hit that subscribe button below and let's get started. All right, so first we're going to look at my Robinhood portfolio, what stocks I have included, and why I have what I have in here. So, the total amount is at $11,634, a large portion of that being store. And so this ranks this by kind of percentage of stocks that I have. And you can actually, if you go and hit this little ellipsis button here, you can see your equity amount, right? So you can see exactly how much you own of each. So store, I own about $4,200 of, makes up the majority of this portfolio. So it tends to track what stock is doing. It's a decent portion, not quite half of the amount, but a significant portion. Secondly is O, so Realty Income. My first two are big REITs here. And then you see Starbucks, Public Storage, Prudential, Coca-Cola, AT&T, Altria, Walgreens, Costco, and Bank of America. So that's what currently makes up my portfolio in Robinhood. I wanted to cover this in this week's episode because I added two new stocks to my Robinhood account, so Costco and Bank of America, and then I added to some other areas as well. So overall, you can see that it's a subset of my my M1 account. Actually, some of these are a little different. So things that I don't own in my M1 account would be these last three. So Walgreens, Costco, and Bank of America. I don't own those in my M1 portfolio, but I do in my Robinhood account. So if we jump back to you can also see your total return, which is nice. You can see how much you've gained or lost on each one of these stocks. So store, obviously I've made quite a substantial amount. Over $1,200 of this 11,000 is actually gains from store, which is quite nice. So we'll go back to last price here and let's look at how I did for the previous week. So you can see I was actually down for the week. And the nice thing about Robinhood is it's visually very good. You can see each day as you hover over within the week, you can see kind of if you were up and down, and it kind of tracks throughout. So very good for tracking prices. I like Robinhood for that. For the month, you can see I'm up about 7%, a little over 7%, and almost 18% for 3 months. So you can start to see what my strategy here is, but we'll cover that in the next segment. And then for the year, I'm up over almost 20%. You can see that I didn't really start investing in Robinhood until March of this year, although I used to invest in Robinhood. So if you see back here in 2017 and 2018, all the way back to the beginning of 2016, really, I was investing in Robinhood, and then I kind of stopped. I sold a bunch of stock at this point, and then started up again here. So you can see my overall gain is actually over 30%, which is great. But if we just look at the year for what I've been purchasing, we're at around 19%. So let's jump into my history so you guys can see the dividends that I have here. So you can see where it's showing purchases, etc. But dividends, what we're focused on. So upcoming dividends here is from Starbucks. I got a dividend yesterday from Realty Income, and it's reinvesting. Obviously, I believe in reinvesting my dividends. I'm not taking that money and spending it or putting it in a different account. I'm just repurchasing stocks that I already own, which is great. Similarly, this month I received a large dividend from AT&T, which was reinvested. And you can just kind of see store capital just gives me a huge dividend whenever it's paid out because I own so many of those shares. So overall, you can see that I'm getting pretty consistent dividends. It'll start to grow as I'm putting more money into the account. But let's move on to the next section. This is a helpful screen before we move on. Actually, you guys can see So my total portfolio value, and then you can see Store makes up this amount, and AT&T makes up this amount, and Realty Income makes up this amount. So it's pretty helpful actually to see kind of what percentage with a visual here. But let's move on to the next section where I look at strategy between my Robinhood account and my M1 account. All right, so you can see a side by side here of my M1 accounts and my Robinhood account. So you can see in M1, I have a little over 32,000 currently. And in Robinhood, I have a little over 11,000. So we are comparing the two because they have different strategies. And if you guys remember a previous video that I did on the 3 different investing strategies that I use, I'll put a link up top so you can watch that video if you haven't seen it already. But you can kind of guess as to what I'm doing in each account. So this one in M1 is labeled passive income. It's super focused on dividends and has quite the variety of holdings. Let's look at my unrealized gain so we can compare these two. So you can see Apple has been my biggest grower here. But overall, you see I have 39 positions here. Quite the mix of dividend growth stocks. And really, it's about passive income and buying things that I think will grow their dividend over time, and hopefully will, with reinvesting those, will compound my growth and my earnings, and eventually lead me to living a financially independent life. Right, that's my goal. That's really the goal here, is to retire early and have money that I can live off of by doing nothing, right? By essentially investing in these companies, I will be getting a return that will grow on its own for the rest of my life. So with Robinhood, the strategy is a little different. I call it treasure hunting dividend growth. Actually, let's switch to the account view so you can see this view of my portfolio, kind of matching the M1 look. What I'm doing here is that I'm buying things that I think are undervalued and that will not only get me dividend growth, but will actually grow its stock price as well. So I'm looking for value stocks, but they have to have a dividend, right? So it's not just pure growth that I'm looking at. I'm not looking at tech companies that don't pay out a dividend, that have super high growth. I have other accounts for that, right? That's not what I'm doing with this Robinhood account. What I'm doing is I'm looking for dividend growth companies, but that I believe are undervalued, right? So that's why it's a fairly representative mix of what I have going in my M1 account. Most of these are also here. I just think at the time they are undervalued, and that's when I choose to buy them. So again, you can see Store Capital. Store was very important to me because I bought quite a bit at a very low price. So if we look at kind of the 1 year, I was buying, let's see, right around here in this like $18 range. So anytime Store is below like $20, I think it's a good value. You can see even now, I think it's a good value because it's kind of 30% down for the year. It's way down from its peak of around $40 in February. It has quite a bit of way to recover, and I just think that it is very valuable for me. So you can see here my average cost was $17.85. I've purchased almost 165 shares, makes up around 36% of my portfolio. And I just think Store is such a good value that it makes sense to keep purchasing it whenever I have some extra cash, or it's hitting certain price marks. I think it is poised for a good recovery, and something that will not only get me quite a good dividend share, but will also get me very good growth potential, and in the future will set me up for, if I ever sell the stock, I will make quite a bit of money on that sale. So you can see the market value, the costs, the returns, the total returns, right? I'm up 43% on Store. And so that's really my strategy. I'm looking at things that are undervalued but have dividends and will net me a high return. So obviously Store is getting me a big return here because I've purchased so much of it, but Realty Income, Starbucks, Prudential, like these are all companies that I think I bought at a good time and will hopefully go up. Now, the latest two that I bought were Bank of America and Costco. Costco's a little different because Costco really hasn't had a bad run at all. I just think it's consistently going to grow, right? So there's really no bad time to get into Costco. If we look at their 1 year, you can see it's just kind of steadily going up. I guess, you could have bought down here if you are like looking at it very closely on a day-by-day basis. You could have bought at a significant dip, and that's what I hope to do in the future. But you can see it's just really not a bad time to get into Costco. They're up 24% for the year. Their 5 year is up 130%. So Costco is the one that's a little different. I think by investing in them, they I will get that growth that I'm looking for. So that's kind of the differences between the two accounts, right? M1 is just more stable, typical passive income, whereas my Robinhood account is focused on undervalued stocks that are going to grow and provide me a dividend. So let's move on to the next section where we quickly go through my M1 account for the week and understand what kind of moves I made or what activity there was. All right, so as we mentioned, the passive income portfolio here is at 32,000 overall. You can see gains of around $2,175. A portion of that is in market gains, but a significant portion is in earned dividends as well, for a total return of around 19%, 18.5%. So for the week, let's look at the week. I was up almost 1%. So if you notice the difference between the Robinhood and M1 accounts, I was actually down in the Robinhood account and up in my passive income account. That's a mix of just market gains and earned dividends, right? I think my portfolio, as we said, is much bigger here. It's almost 40 stocks, and it is more diversified. So, I have stocks in here that just perform better for the week. And then if we look at this quarterly view, which I always like to look at, I've done a little better in the Robinhood account. Again, I was going for value investing for the quarter, so up 16%. And then for the year, pretty similar. I mean, I think I'm doing slightly better in the Robinhood account there as well, right? So overall, I think both strategies are valid. But let's look at the activity here for the week. You can see I was paid out some dividends this week from Realty Income, $1.44 there. AbbVie, one of my favorites, $12.34, which is a nice number, 1, 2, 3, 4. Apple paid out, their dividend, and even though Apple's not a huge yield, it is a grower, right? It's one of those things that you could theoretically, I would purchase in my Robinhood account. I think Apple is poised for great dividend growth and potentially is undervalued. And you're saying, okay, how can a like $1.7 trillion company be undervalued? If you look at the analysis, Apple is actually undervalued compared to a lot of its technology peers, especially if you just look at PE ratios. But Apple, has paid out a dividend, which I think will only grow over time as they continue to have all this cash sitting around. I think they will only increase that dividend, and it's something I'm looking forward to in the future. You can see I bought a few things, so I've actually changed my my deposits to weekly. So if you look at my last video, I talk about how the more frequently you buy, the better your dollar cost averaging is. I'll put a link to my dollar cost averaging video so you guys can watch that as well. But by investing more frequently, you are more likely to kind of negate some of the lows and purchase at a time when it makes sense, value wise. And so I've changed from $500 every 2 weeks to $250 every week. So the same amount of money, but just more frequently investing. So yeah, that's pretty much what happened this week. Nothing too substantial. We can look at the buys here. You can see the mix of things, a lot more AbbVie, some Starbucks mixed in, AT&T as usual, and then Microsoft and Gilead. So you can see the mix here. I think that'll wrap it up for the week. If you guys have any comments below on which platform you prefer, M1 or Robinhood, I would love to know why. Leave a comment below. Feel free to subscribe if you want and give me a thumbs up. It really helps the channel and helps spread the videos. Thanks again, everybody, for making it through the video, and I will see you again next week.